Discuss that repo rate cut by the RBI further. I'm now joined by CII President Naushad Forbes. Thank you, Mr. Forbes, for taking out the time to join us on the show. Your reaction to the 25 basis point rate cut?
So it's the 25 basis point is very welcome. Indeed, you know, the way in which inflation expectations work out, the actual rate cut is almost less important than the expectations of whether or not there's going to be a rate cut. So my own way of handling it is to not expect a rate cut, and then if there is a rate cut, as we had today, that's very welcome. And I think is a nice trigger for the economy going forward. I think it sustains the rate cuts that we've seen over the last year and a half. We now have almost a 2% rate cut over the last 18 months, 20 months or so, and I think it will only enhance the performance of the economy going forward.
Right, and what about the cost of money? Are you hopeful that going forward that will drop a significant bit or even just by a margin?
It should. I think it will all depend on how well we perform on the inflation front. We, at present, as you know, the government has set a target of 4% plus minus 2% for inflation. We're currently tracking at around 5%. And if this sustains over the next few months too, I think that will form the basis for a further modest rate cut. But again, I come back to my earlier point that I think the best way of dealing with this is to not expect a rate cut, because if you expect a rate cut and then don't get one, that causes problems for the economy. If you don't expect a rate cut and then you do get one, that only adds to the effectiveness and progress of the economy going forward. So my suggestion is don't expect a rate cut and be happy when we get one.
Right, so now we'd recently done a poll with 50 top CEOs to a question as to whether the high cost of money is impeding growth, and around 34% of those polled had said that it's not an issue. What's your response in this finding, and what does it tell us?
So, the key issue that the economy has been facing over the last few years, I would say, has been demand. And I think in the last 6 months or so, we've seen a significant pickup in demand. As this demand is not affected so much, except for a few sectors like some of the larger big-ticket consumer durables, so demand is not affected so much by the cost of money. As such, we can see a demand pickup and a significant demand pickup and a sustained demand pickup indeed without much change in the cost of money. What needs to change, though, is the investment cycle going forward. What's been really depressed over the last 3 or 4 years has been investment, especially private corporate investment. For that to pick up going forward, we need first a significant sustained pickup in demand. We've got the beginnings of that now, and if that sustains for the next 6 months too, then we will start seeing, I think, a robust pickup in investment. As investment picks up, then the cost of money becomes critical, because a lower cost of finance then only enables so much more investment and capacity creation to happen in the economy.
Right, Mr. Forbes, we're going to leave it at that. Thank you so much for joining us on the show today. It's always a pleasure speaking with you.